federal deficit went from $1.4 trillion in 2020 or 2022 to $1.9 trillion in fiscal 23. And full employment, blah, blah, blah. Everyone was so puzzled by it. And it was very simple. It was the stock market fell 20% and was down 20% year on year for much of the year. And, non-withheld comp, stock options, stock compensation fell off a cliff. And so you had basically with, call it what we grew up with, right? And in the late 90s, throughout much of the 2000s, like friggin' stocks fell 20% peak to trough, like all the time. Like that was just sort of like, it was a bad correction, but it was not like, but when that happened, the deficit didn't rise $500 billion. And that's ultimately sort of, I think, sort of the beyond the tipping point where traders don't know where that is. But what they do know is policy has been allowed to evolve such that debt to GDP is where it is. Deficits are where they are. They are structural. And so they're structurally high to start with, right? 6-7% GDP deficits. And we've allowed the markets to evolve such that effectively the treasury market is backed by the stock market on the margin by virtue of this